Welcome back to Runnings Digest. We give you those quick insights into the economy and stock market, all in under 15 minutes. Today, we're going deep. We're doing a deep dive into the Indian economy, specifically its outlook for 2025. We've got a stacker of reports and data. And our mission is to really pull out the most important nuggets for you. We know you're interested in the Indian economy, so we've got some fascinating data points here about its growth, about inflation, and for key sectors. And then, of course, we'll examine what factors might shape its future. Now, I've got an expert here to help us make sense of it all.
Let's jump right in. India is currently the world's fifth largest economy, and is projected to become the third largest by 2027. That's a meteoric rise. What's driving this incredible growth?
It's a confluence of factors, actually. One key driver is robust urban consumption. More people are moving to cities, and they have more disposable income, which translates to more spending on goods and services. We also see significant government investments in infrastructure. Think roads, railways, ports. These investments lay the groundwork for more efficient movement of goods and people, boosting productivity and facilitating trade.
So it's like building the foundation for long-term economic expansion.
Exactly. And then there's the service sector boom. India has become a global hub for IT, finance, and business outsourcing. This sector is growing at an impressive rate and contributes a whopping 60% to the GDP. That's more than double the contribution of agriculture, which still employs a large portion of the population. To put this in perspective, that's significantly higher than the service sector contribution in many developed economies, including the U.S.
Wow, 60%. Sounds like the service sector is really leading the charge. But what does all this translate to in terms of actual GDP growth?
Well, India clocked an impressive 8.2% GDP growth in fiscal year 23-24. While that rate is expected to moderate slightly, the projected growth rate for 2025 is still a very healthy 6.6%.
Okay, so that's still a lot higher than what many developed economies are projecting. So if someone's looking for investment opportunities, the Indian stock market should be on their radar, right?
Absolutely. A growing economy typically translates to a rising stock market. India's growth story is attracting investors looking for long-term returns.
Makes sense. But hold on, high growth often comes with high inflation.
Yeah.
What's the situation on that front?
You're right. High growth and inflation can go hand in hand. Currently, inflation in India is at 5.48%, which is within the Reserve Bank of India's target range. However, we did see an uptick to 6.21% in October 2024, driven mainly by rising food prices.
Okay, 6.21%. That's something to keep an eye on. Is that considered high by global standards?
It's moderate compared to some economies, but it's still a concern. You see, inflation erodes purchasing power. It means that people's money doesn't go as far as it used to, especially when it comes to essential goods like food. If inflation continues to rise, it could impact consumer spending and ultimately slow down economic growth.
That makes sense. So while a growing economy is exciting, keeping inflation in check is crucial. Speaking of impacting people's livelihoods, what's the employment situation looking like in India?
Unemployment is definitely a challenge. It currently sits at 8%, and there are additional concerns about job quality and low female labor force participation.
8% is quite significant. Are there any bright spots on the jobs front? Any sectors showing potential for job creation?
There are some promising sectors emerging. Fintech and renewable energy are two areas with huge potential for job creation. India aims to achieve 40% non-fossil energy by 2030. So renewable energy in particular is expected to be a major driver of employment.
That's good news. So green jobs could be a key part of India's economic future. Now, shifting gears a bit, I've got to ask about those eye-popping foreign exchange reserves. We're talking a whopping $643 billion. Break that down for us. What does that actually mean for the average person?
Think of it like a giant national savings account. That provides a buffer against economic shocks. So imagine a sudden currency crisis or a global oil price spike. Having robust foreign exchange reserves allows India to weather those storms without causing significant disruption to the economy.
So it's a safety net that provides stability, and I imagine it also gives foreign investors more confidence in the Indian economy.
Exactly. It's a signal of financial strength and stability, making India more attractive for foreign investments.
Now let's talk about trade. I understand India has a trade deficit, meaning it's importing more than it's exporting. Help our listeners understand this. Is this a cause for concern?
Not necessarily. Trade deficits are common, even for growing economies. It's important to look at the context. India's key exports include engineering goods, petroleum products, and electronics. On the import side, Crude oil and electronics are major components.
So it's not just about the deficit itself, but what's being imported and exported. What are the implications of this trade deficit for India, both positive and negative?
Well, on the positive side, imports can provide access to essential goods and raw materials that may not be readily available domestically. For example, India relies heavily on crude oil imports to meet its energy needs. Imports can also help boost consumer choice and provide access to cutting-edge technology.
That makes sense. So imports aren't inherently bad. But what about the downsides?
Of course, there are downsides too. A persistent trade deficit can put pressure on the Indian rupee and make it more expensive for Indian companies to do business internationally. It also means that a portion of India's wealth is flowing out of the country to pay for those imports.
So it's about striking a balance. Now, we've talked a lot about the broader economic picture, but I want to zoom in on the sectors that make up the Indian economy. We've got agriculture, manufacturing and services. What's the breakdown there in terms of their contribution to the overall GDP?
Agriculture, despite employing around 50% of the workforce, contributes only about 20% to the GDP. Manufacturing contributes roughly 20% as well. The real surprise for many people is the dominance of services. As we touched upon earlier, it contributes a whopping 60% to India's GDP. IT finance and business outsourcing are the real stars of this sector. In fact, the services PMI, which is an indicator of business activity in the service sector, reached 56.0 in October 2024.
You mentioned the services PMI. For those unfamiliar, could you briefly explain what that is and why it matters?
Certainly. The Purchasing Managers Index, or PMI, is a survey-based indicator that measures the health of a particular sector. It asks executives about things like new orders, production levels, and employment. A PMI reading above 50 signals expansion in the sector, while a reading below 50 indicates contraction. So that 56.0 figure suggests strong growth in services.
Okay, so it's a quick snapshot of how a sector is performing. Thanks for clarifying that. So coming back to these sectors, any other interesting trends or surprises you've observed?
What's fascinating is how India's economic structure is evolving. We're seeing a significant shift towards a knowledge-based economy, driven by the booming IT and finance industries. This highlights a transition away from traditional sectors like agriculture, even though agriculture remains a significant employer.
Okay, so we've covered quite a bit of ground here, from India's impressive growth to its trade dynamics and its evolving sector landscape. But before we look ahead, I want to talk about the role of government policies in shaping India's economic journey. How has the government's approach to economic management impacted its trajectory?
Government policies play a crucial role in any economy, and India is no exception. In recent years, we've seen a strong emphasis on infrastructure development, which we discussed earlier. Upgrading roads. Railways and ports is essential for creating a more efficient and connected economy, which is attractive to both domestic and foreign businesses. Alongside these physical infrastructure upgrades, there is also a major push for digitalization. The government's Digital India initiative aims to bridge the digital divide, bringing more people online and improving access to services.
That's interesting. It seems like a multi-pronged approach.
Yeah.
Investing in both physical and digital infrastructure.
Precisely. And there's another crucial element, streamlining regulations and attracting foreign investment. The government has made efforts to improve the ease of doing business, aiming to create a more conducive environment for both domestic and international companies.
So it's about creating a more welcoming and efficient ecosystem for businesses to thrive. But government policies are just one part of the equation. What about the role of the Reserve Bank of India, RBI, the central bank? How have their monetary policies impacted the economy?
The RBI plays a critical role in maintaining financial stability, managing inflation and influencing the value of the rupee. One of their key tools is adjusting interest rates. If inflation is rising too quickly, the RBI can raise interest rates to cool down the economy. Higher interest rates make it more expensive to borrow money, which can curb spending and investment, ultimately helping to bring inflation under control. Conversely, if the economy is slowing down, the RBI may lower interest rates to encourage borrowing and stimulate growth.
So it's a balancing act, trying to maintain price stability while also supporting economic growth. That sounds like a tough job, especially given the uncertainties of the global economy.
Absolutely. It requires careful analysis and proactive measures.
Okay, we've laid the groundwork and covered a lot about India's current economic situation. Now let's get to what everyone wants to know. What does the future hold? What are the predictions and projections for India's economy in 2025 and beyond?
While predicting the future is never a sure thing, the consensus among experts is quite positive. Most projections indicate a GDP growth rate of around 6.6% for 2025, which would make India one of the fastest-growing major economies globally.
6.6%. That's incredibly optimistic, especially considering some of the challenges we discussed. What are the main drivers behind these positive projections?
One key driver is continued robust domestic consumption. As more Indians enter the middle class and disposable incomes rise, consumer spending is expected to remain strong. This internal demand is a significant factor in driving economic growth. We've also got ongoing government investments in infrastructure projects, which are creating jobs and boosting productivity. And of course, the services sector is expected to continue its impressive growth trajectory, further solidifying its role as the backbone of the Indian economy.
So a combination of internal strength and continued investment. But even with this positive outlook, there are always potential challenges. What are some of the headwinds that could impact India's growth trajectory?
Inflation is one key concern. Although it's projected to moderate, we can't ignore the potential impact of rising food and energy prices. These everyday expenses hit everyone's wallets, and if they increase significantly, it could lead to decreased consumer spending and ultimately affect economic growth.
That makes sense. So keeping an eye on inflation is crucial. We also touched upon the global economic landscape earlier. How might external factors like geopolitical tensions or a strong U.S. dollar affect India's future prospects?
Geopolitical uncertainties and currency fluctuations are always wild cards. Tensions in different parts of the world can disrupt global trade and supply chains, which can impact India's imports and exports. This could potentially lead to slower growth. And a strong U.S. dollar makes imports more expensive for India, putting pressure on the trade deficit.
So those external factors are definitely something to watch. What about internal challenges? Are there any structural issues within the Indian economy that could hinder its progress?
One of the most significant internal challenges is unemployment. Despite the overall economic growth, job creation hasn't kept pace with the expanding workforce. This is especially concerning given India's young and rapidly growing population. If those entering the workforce can't find quality jobs, it can lead to social and economic instability. Addressing unemployment and ensuring that growth translates into widespread job creation will be essential for India's long-term success.
So creating more and better job opportunities is key for inclusive and sustainable growth. Now, having looked at both the promising projections and the potential roadblocks, I'm curious to hear your overall assessment. What's your sense of India's long-term economic trajectory, considering all these factors?
I'd say I'm cautiously optimistic. India possesses many strengths that make it a compelling growth story. A young and expanding population, a vibrant entrepreneurial spirit, and a government committed to economic reforms. These are powerful drivers of long-term prosperity.
But it's about navigating those challenges effectively.
Precisely. Addressing issues like inflation, unemployment, and infrastructure gaps will be crucial to unlocking India's full economic potential.
It sounds like India's economic future is a story with many twists and turns. Full of potential, but also requiring careful navigation. But even amidst the complexities, one thing is clear. India's economic narrative is far from over.
Absolutely. It's a story that's still being written, and it's one worth watching closely.
I love that. A story still being written. It leaves us with a sense of anticipation, wondering what the next chapter holds. But before we let our listeners go, let's bring it all together. What are the key takeaways they should keep in mind as they follow India's economic journey?
Here's what I'd highlight. First, remember that India is a rising economic power with immense potential for growth. While there will be bumps along the way, its long-term trajectory is positive. Second, while India has many strengths, it's important to remember that it's not isolated from global events. Geopolitical tensions, currency fluctuations, and shifts in global demand can all have a significant impact on its economy.
So even though India has strong internal drivers, it's still part of a larger interconnected global system.
Exactly. And third, while we focused on the positives, remember that India faces internal challenges as well. Inflation, unemployment, and income inequality are issues that need to be addressed to ensure sustainable and inclusive growth.
So it's about balancing that impressive growth with policies that benefit all segments of society.
Right. And finally, the most important takeaway is this. India's economic future is not preordained. It will be shaped by the decisions made by its leaders, its businesses, and its citizens.
That's a powerful thought. India's economic destiny is in many ways in its own hands.
Precisely. And that's what makes it such a fascinating story to follow.
Well said. And to our listeners, we encourage you to stay informed, engage in these conversations, and contribute to a positive and prosperous future for India.
It's been a pleasure diving into this topic with you today.
Thanks for joining us. And to all our listeners, thanks for tuning into Earnings Digest, where we break down complex economic topics into bite-sized insights. We'll see you in the next episode.